Hello, YouTube. I hope everyone is doing well. Oh man, step index, right? Yeah, man, it's been a journey. I think I'm getting the hang of it now. I'm starting to see a bit of light, and it's getting me excited to even talk about it, sharing it and hoping that you guys are learning how to spot these kind of trade setups. So, this is going to be like a review of today's price action, the 12th of July. Now, you know that I trade the PM session. That's what I like to trade nowadays. It's a session that's very, very late in the day. So, whenever I'm coming in the PM session, I know that there's going to be liquidity. The first liquidity that is close proximity to the 130 opening range of the day, which if you could see like from the 7 a.m., that's where we had the high for the New York session. It was rallying ever since the opening of New York. So with the September's commentary that I did last year, I was talking about a fair value gap on the 15 minutes time frame. Now you guys did not catch that one because I tucked it so deep. But here it is. It's a New York session fair value gap on the 15 minutes time frame. Now, of course, there is a lower time frame, like the 1 minute time frame. We can zoom in inside of the 1 minute time frame between the 6 a.m. and 7 a.m. And we would want to see the first presented fair value gap of New York, which starts at 7 to 7:30. That's where you would look for that particular fair value gap. So if you want to look at a higher time frame as to where price could particularly trade inside to rebalance and inefficiency, this is the idea that we are utilizing. Whenever there is a session inefficiency and you have a bias, remember that I said that I have a bullish bias, and step index should reach higher into those daily time frames inefficiencies. Now that's what we are trying to do. I think it wants to rebalance the June's price actions bearish inefficiencies. So I think that it wants to redeliver into those inefficiencies. So we're going higher, right? So utilizing the same principle that I had introduced in the market efficiency paradigm video, I explained to you that price action, it does two things. It trades into inefficiency or it takes out liquidity. It's always either of those two. All right. We are looking price in those two lenses. Okay. So here it is trading inside of an inefficiency. What is that inefficiency? It's a timed based inefficiency. We are not just looking at any inefficiency. There are whole loads of inefficiencies, but the one that we want is the New York inefficiency. What's so significant about that inefficiency? Well, it can be used as a support and resistance. Why does it have that key element? Well, that same fair value gap inside of the 1 minute time frame is nested and congested inside of this inefficiency. There is another 1 minute time frame PD array, and it's a fair value gap. So this is a powerful support. Okay, 1 minute time frame going deep in that New York opening range fair value gap, the first presented inefficiency. So that particular fair value gap, it needs to be rebalanced in order for us to trade inside of that fair value gap. So we are observing price action leaving the 7 a.m. and here is the 12 a.m. and somewhere here I did not annotate it. It is the 10 a.m. So 10 a.m. high is right there, and we have 12 a.m. So these are close relative equal highs. That is suspect. So we trade into our support. We take out the liquidity, right? And we reverse. We trade to the upside. So We trade to the upside at what particular time? The opening range of the PM session, which is today. This is what price action that I observed today. So we traded into that key level, the 15-minute time frame. So I'm going to scroll back. I saw these relative equal highs and I said, that is suspect. That's where I want to see price action trading into. Now we have the 7 a.m. inefficiency up there. Remember, wicks are inefficiencies. So there is an inefficiency with this particular wick, and there is another inefficiency, which is the opening range of 7 to 7:30. The first inefficiency there, right, is close to this wick. So that's a whole lot of alert up here. And these two relative equal highs, they are suspect as well. So we supported on that New York fair value gap, and I'm bullish on the daily time frame. So I liked what I saw here, and I thought that I would share it, revisiting the September's content with the New York fair value gap or the London fair value gap. This is how I would present that particular model that I was trading in the day trading commentary for that particular September. So we had this inefficiency and we are trying to go up with it, right? That's the idea. We are bullish. So this is the 50 minutes time frame inefficiency. We have transposed into the 1 minute time frame. And I know this is a screenshot, by the way, guys. This is just a screenshot that I took, that I was just observing price action. And I couldn't record this particular trading session, live as I'm doing the video. I couldn't do that because I had a friend come over, and this is what I was able to do today, right? So yeah, it happens, man. It's life. It's life. It gets in the way. But I enjoy his company, man. I enjoy his company. He just lives by a couple of houses. He's a great friend, right? He's trying to get close to me. And so he sometimes takes up some of my time, but that's all right. He doesn't do it that much. But nonetheless, this is what I saw, right? We have the 12 a.m., which is New York lunch highs. But the New York session lunch, it starts at 11 o'clock, somewhere here. So we have all of these lunch highs, which are close to the 10 a.m. So that is internal range liquidity, right? So we need to get back up there to take out liquidity. So we just traded into that inefficiency and we've seen some movement in the upside. So incorporating the PM session first presented fair value gap, price action rebalanced that inefficiency with a consolidation. See that? It was a tiny consolidation on the 1 minute time frame. It's so cute. It went up with the inefficiency here that is being printed on the 1 minute time frame is bullish, right? We're trading above our first presented fair value gap. If we've traded above it and we're expecting a bullish bias, this is what we would expect to see. Inefficiencies that are bullish, right? So this is a fair value gap that is close to the, our opening range PM session fair value gap. It's very close to it. So any inefficiency that is close to it, I incorporate that into the PM session, right? So we trade back into it, and I had a beautiful long opportunity near our first presented fair value gap of the PM session. I was attacking the 7 a.m. highs, but I closed my trade above the 12 a.m., right? It was about 10 points of a trade. Now remember, in the PM session, this is the standard, 10 points. But the target here is 20 points. So I'm allowed to have a target of 20 points, but I take my profit at 10 points. Now, I am not yet comfortable to hold for a 20-point run. I'll be honest with you, right? I'm not comfortable holding that position. So I take my trade and I close it above the 12 a.m., which is the nearest liquidity pool. It is time based. So what did we do down here? We accumulated. We are smart money. Okay, we're coming in the time of the day that we would expect a reversal. Well, we would be trading against everybody who went short in the 7 a.m., right? Anybody who has went short, they kept on trading their stop losses, right? So we need to retrace and take some of those liquidity pools. Now you're getting it? So we are bullish, guys. We are bullish. So it managed to go above the 10 a.m. highs. I mean, man, that was a beautiful trade. That was a beautiful trade. We came back and rebalanced that 15 minutes time frame, right? We rebalanced that inefficiency, meaning that we traded below it, above it, in between it, all over it. But we stayed near that rebalance. We stayed near the 15 minutes time frame fair value gap. And we supported on it after we had done a market structure shift. This was beautiful. Market structure shift with an inefficiency right off the 2022 ICT YouTube model, incorporated with a higher time frame, like the 15 minutes time frame. Man, this is beautiful. All right. So yeah, this is where the market is right now. This is where it's trading. And I'm going to go into the daily time frame. Bear with me. So I'm going to take off the sessions, step index on a daily time frame. Now, in my previous commentary, I was explaining my bullish bias. We are now bullish. We are trying to rebalance some of these inefficiencies, right? Maybe we would want to trade up in there. There's some of these liquidity pools. That's what I'd be interested in. Right? We had these relative equal highs here. So price action dropping down like this, it created inefficiencies. It was moving quickly. You guys saw that, right? It was like lightning. So we left these inefficiencies that were on the downside, that were going to the downside. We practically rebalanced all of this and we took out liquidity all the way down into this particular low. Now, this particular low holds key information. Remember that we took the wick as a PD array and we split that wick into half and we had the 50%, which is equilibrium. We studied that this particular wick has some sensitivity in the 50% and it wants to send price higher to rebalance those inefficiencies were caused by the opening of July. Okay, so we're going to take that and incorporate the opening of July. I'm not sure if the day there is correctly placed. So I'm going to switch over to my Johannesburg just to make sure that we are in the same path. So this is the 2nd of July. So the 1st of July is right there. So the initial high of July, that's where it was printed. 7941.3. That's the key level that I'm looking at. If price action wants to continue, that would be a suitable, target for filling out imbalances. Okay, just like how we filled price action to the downside, we filled it all the way down into the consequent encroachment of this wick. That's precision. Okay, so we are anticipating a bullish run to refill these inefficiencies. Market efficiency paradigm, right? It needs to rebalance. So if they have longed this market down here, where would they take profit? Up here. right? I don't know if they would have an interest in this buy side liquidity. I am not sure as of yet, right? So if we trade above this high and we close above it, then I'm going to be looking for these highs as a liquidity to be taken, some kind of like a draw on liquidity. So yeah, that's what I'm looking at in terms of a long-term bias, if indeed we close above this. So yeah, that's all that I have for this particular video, and this year's commentary is going to be so great. So I hope you guys learning how to anticipate this particular setup and incorporating it into your time schedule. So I see you guys on the next video. Peace.